Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on Forex market and euro currency in particular. So you can see recently we've got this downward action. It was ADP report was mostly relatively strong, and that has supported the idea that probably Fed still has hawkish power and could be a bit more hawkish in a rate decision. Actually, FOMC minutes that have been released mostly carries the same information, and that, well, has brought some strength to the United States dollar. So in general, we recently discussed the scenario with the short entry on the euro currency. Those of you who have taken the position probably now feel good and need to think about how to protect the results. So because today we got the non-farm payrolls release, and very often in the recent times, payrolls could be really drastically different compared to ADP report. If a few years ago they were correlated very strong, so almost the 80-85% correlation was between these numbers. Currently, in these days, this correlation drops significantly. So sometimes it happens when ADP and payrolls might be in opposite direction. So that's why it will be, makes sense to think about protection and tightening stops at least. Speaking about further perspective, in the dollar index, we also have strong downward upward action. So it means strength in the United States dollar. It mostly repeats the picture that we have on the euro currency. Recent performance almost have become the bearish reversal sessions. Just take a look, market dropped and closed the tail significantly below the previous lows, but it hasn't formed a new top. So that's why it's not perfect reversal session, but still performance looks rather bearish. Nearest downside target, it's a XOP with this ABCD on top, shows 104.45. And actually it stands and makes an agreement with the nearest support area, 104.30, 104.60 area. So it stands precisely between them. So that's rather strong area. Daily reversal stands slightly lower, is around 103.72. So that's why the chances that market will complete this target are relatively strong. At the same time, all our performance, by taking a look at the daily chart, some other markets, we can't call it as it's definitely the reversal to the downside and some acceleration. Now it still looks like kind of the retracement after this upward action. It's just some starting with the pullback. So we need to see how it will perform on a larger scale and see what will happen next, and especially around this level. So, but currently we're focusing on the nearest standing target and see what will happen. On other currencies, you approximately could see the same performance. On Great British Pound, as we mentioned earlier, market shows no signs of the bullish pullback at all. So if euro currency shows the second top here, Great British Pound is not. And on the Japanese yen, we also see that market is trying to break the pattern. So recall what we talked about this. So to make the decision that something is changing on the market should break it, consolidation, and start forming some different price behavior compared to the previous repeating patterns here. So maybe here, as you can see, it's attempt of the breakout. But probably we should build this line. It's a bit tighter. So if we will get here some different patterns, market will break it up and start moving higher, forming maybe some kind of the hand and shoulders here. Well, that could mean something. So it's also will make impact on the euro currency, and that led us to conclude that maybe indeed we are getting our bread and butter and so on. Meantime, on the follow time frame chart, you can see market is breaking down this channel. So at least it's trying to do this, standing right now below it. On the hourly chart, let's take a look what we have. That's our yesterday triangle entry, if you remember. So we said this might be a second chance for a short entry based on the Giordanopoly Minesweeper tactics. This market has broken it down and hits the COP target. Well, in general, I would say that very solid chances that market will proceed action downs to the downside. Maybe not today, but in nearest term. It's just because this action as well as this one stands relatively fast. So when market shows some acceleration right to the COP, it means that if even we will get some performance and some respect to this target with a pullback, later it's good chances that we could get the downside continuation to the OP. Besides this, take a look, OP is 104.45, it perfectly agrees with the daily XOP target. What we could do currently, for the bulls, I do not see good chances for position taking right there. So only if you would like to make a bet on the payrolls report, suggesting that this will be very weak and market could jump up. But this is, well, I can't make any advice on this subject, just because it will be more like a gambling rather than analysis. And based on technical picture, I would say that bulls probably should stay aside and see what will happen. For the bears, if you have the position, you could just think about where to place the stop. Maybe tight it, maybe not, maybe just keeping it on the break even and see what will happen. For another entry on the short side, there are two possible scenarios exist. First one is based on the pullback with respect to the COP. I'm not sure that we will see it today because it's too few time stands until the non-farm payrolls report, and anyway, probably any entry opportunity with a pullback somewhere to the 105.80, 105.85 conference resistance would happen on next week. Another opportunity is using stop sell order. For instance, if we suggest that payrolls will be also positive, you could place, for instance, stop sells right around the lows. So somewhere around 105, even 105.05 near these lows. And if in the moment of the payrolls indeed they will be positive, this market will just start dropping, breaking it down, moving to the OP. That is possible. But the major risk here is that before the payrolls, right, for the few seconds before this might be extreme volatility, as the market makers will start grabbing stops and shaking the boat, and you just could buy, sell occasionally, and market will return it back up. So you could be trapped in the wrong direction if the payrolls will be negative, or I mean poor. So that's the major risk that could happen. That's why that's choice is up to you whether you would like to use this method for position taking or not. But in current circumstances, I see only these two moments that you could use for position taking. So let's see what numbers we will get. This will be interesting, and definitely we will discuss it in our report in the weekend.